Hello and welcome to the Essential Property Group. My name's Peter Ward and I'm the founder and managing director of the company. And I'm also one of very few qualified property investment advisors in Australia with over 16 years experience. Essential Property Group is a locally owned business with a national footprint. Now, if you found your way to this video, there's a good chance that you're looking for property investing. And I congratulate you firstly for doing that, for taking the initiative to do something about it. My guess is you're still thinking about it, wondering about what you might do and whether you would use Essential Property Group for that. But while you're thinking about that, I'd like you to consider this information from the Australian Bureau of Statistics. 81% of Australians presently retire on less than $31,000 a year, and that includes superannuation, with just 8% retiring on over $50,000 a year. Now, that's not very good statistics. The question for you is, where are you presently heading on this graph? And is it possible to get from here over to here? You see, in the 16 years I've been doing this, I've met hundreds and hundreds and hundreds of investors, and all but 17 of them were heading into this column. 17 out of the last 16 years were going somewhere in here and only one or two out here, but all the rest were going in here and didn't know it. Where are you presently heading on this graph? And that is accessible. We can check that for you. But of course, it is possible to get out here. It'll take some patience. It'll take a measure of persistence on your part. It'll take a preparedness on your part to develop the knowledge, skills, and attitudes that you need to be a skilled investor moving forward. And if you're prepared to do that, then you've got some chance. Secondly, though, I urge you to take care, because in Australia, there are 4 primary investment classes. Property is the one we're talking about, but it happens to be the only one that's not regulated by the Australian Securities Investments Commission. That means there's no licensing, no qualifications, no experience needed. I don't need any of that. Anybody can set up and do what I do. And therein lies the problem. You can't trust anybody in the property industry because there is no regulation. Now, I know that begs a question. How do you know you can trust me? Well, frankly, you don't. So why would you? But look, understand this much. The property done correctly doesn't require trust. And when you go through into Wealth Skills Stage 1, you'll understand what I mean. Spend a couple of hours learning what it is that you need to know. And you'll find that trust isn't necessary because most of it is common sense. It just needs to be understood and packaged in a way that you can follow. I looked up a whole bunch of property groups in Sydney a couple of weeks ago. Of the 41 I looked at, 40% of them had less than 5 years experience and 70% of them had less than 10 years experience in the industry. That's what you're up against. So please take care with who you're talking to when it comes to your property investment. Essential Property Group's a little bit different. Firstly, I'd like you to be aware of the fact that we are independent in the process. Now, where you go to a large mass marketing property spruiking company, chances are they do everything in-house. They'll develop the land, sell it to you, build a house on it for you. They will do the finance for you. They'll do your tax for you. They'll do your contracts and conveyancing for you. They'll probably even be able to supply you insurance and financial planning and do all of that in-house. And whilst that's a great business model for making money, it brings with it a much greater potential for conflict of interest, particularly if they're developing the land and selling it to you. They have a direct vested interest in selling that block to you. Essential Property Group don't do that. I choose not to, even though I could. I choose not to because I don't want to have that vested interest. As a result, I source land from developers anywhere in Australia that meet the criteria that I'm looking for. I have no vested interest in any particular block or any particular builder at any given time. That leaves me free to look after your interests, and I can let that block go and look at this one instead if we wish to. That independence is important, but it also means that you don't have me delivering those services to you even though you need them. For that, I recommend that you develop a team of independent specialists around you who are skilled and experienced in each of those fields, like a skilled and experienced investment tax planning accountant who can get your tax foundation right, someone skilled and experienced around investment finance. These are the kinds of people you need to have as a team of specialists around you and make sure they have no vested interest in the property whatsoever. Okay, that way your interests are being protected. Now, I do have a panel of people that I put together over the last 16 years who are independent, and they're on the panel because they prove that they have values that are aligned with ours and are independent, have no vested interests, and they're interested in looking after your interests only. You don't have to use them. You can use whoever you like for those services. But I do strongly urge you to put that team together, and I can assist you to do that. because it's an important element. All right, now there is much that you can know about property, but a lot that I'm pretty sure you probably don't, in my experience. Did you know, for instance, that of the 70% of investors in Australia, 70% of the people who invest in property in Australia only ever invest once? That's it. They just do it once and never again. Why would that be, do you think? Well, the answer is pretty simple, because something went wrong for them. And this is where this diagram fits in for us. Let's have a look at this diagram for a moment, please. I want you to pretend with me that this circle represents the sum total of all human knowledge that there is to know on the planet. How much do you reckon you know? Yeah, probably something like that, right? Or even half that, if we're being fair thinking. For the diagram, that doesn't work though. Let's pretend this bit here is what you, is what you know. But you don't just know it, you know that you know it, like you know that you know what your name is. Nice easy one, right? Then there's this much bigger chunk of what you don't know. Good. The interesting thing on this one, though, is that you know you don't know it. Now, I'm guessing you're not a brain surgeon. Sorry if you are, but I'm guessing you're not. And if you're not, then I guess you'll know that you don't know how to do brain surgery. Good point. Then there's this much bigger chunk here, and it's also what you don't know. But you don't know that you don't know it. That presents a problem, doesn't it? Because it's a blind spot. If you don't know what you don't know, how can you take action on it? And that's where the blind spot is for the majority of investors, and I believe why 70% of property investors only ever do it once, because they're investing from knowledge that comes out of here or here, and they're making mistakes as they go. This is what you need to know, and this is what Wealth Skills Stage 1 is all about, understanding the what you don't know that you don't know. I have a couple who are clients of Essential, been clients now for over 15 years, and they're a really good example of this very issue. When I met this guy and started having a conversation with him 15 years ago about investing, he said to me, forget it, been there, done that. We've had two, they were complete failures, I'd never do it again. It took me about 6 months, but I finally convinced him to come to a workshop, Wealth Skills Stage 1, which is what you're looking at going into. And he said, okay, I'll tell you what, I'll come along to that as long as you never talk to me about it again after that, because I've already said we're not interested. And he was someone I knew, so fair enough. I said, yeah, okay, I'll be with that. So he came along to the workshop. And he came up to me afterwards and he said, you know, while I was sitting there listening to you teach about property, there were light bulbs going off in my head everywhere. He said, I was thinking, oh, I didn't know that. Oh, I didn't know that you could measure that. Oh, I didn't know that about that. He said, we didn't know what we were doing. I can see that now. Okay, so what do we do next? And off he went. And 15 years later, they hold a portfolio of 8 properties. And they don't have any difficulty with any of them. You see, it's about what you don't know that you don't know. So many investors shoot themselves in the foot without realizing they're doing it because of what's in here. My job is to teach you what's in there first before you get started. And that's the way we're going to move forward. Did you know, for instance, that it's possible to measure tenant reliability? Whether a tenant will pay and how reliable they'll be about that and looking after the property. And did you know it's possible to measure growth cycles? Like to know when a market is going to go into growth. You see, if this is a growth curve, anywhere in this green band is a good time to buy, of course. But this point here is the best, isn't it, where the red star is? If we knew when that was, you could make reasonable money in property, wouldn't you? Well, of course, the answer is yes. And most people I've run into over the last 16 years are of the view that that's crystal ball gazing. Well, I'm here to tell you it's not. In Wealth Skills Stage 1, I will show you how to measure when that is. And it's not rocket science. You'll be surprised how simple it is. But it needs to be learned just the same so that you understand how that works. And once you have that, then you've got some hope. Here's another one. If it hasn't occurred to you already, it's the land that goes up in value. Buildings go down in value. So land is where we want to be doing the investing. And yet, I see so many investors aiming at residential units where there's only about 10% land value. So 10% of the asset is going up in value and 90% is going down in value. Residential houses, you've got about 50% is land value and the other 50% is building value. So think about that. If you've got 50% land value here, 50% of the assets going up in value, here you've got 10% of the asset going up in value. Which of the two makes more sense? And yet the majority of investors in Australia still go into units because they don't know what they don't know. Land is the asset that is not being reproduced. It's a finite resource. Buildings are not. Even the tax office know they go backwards in value. That's why they give you a tax deduction for them. So the less we put into buildings, the better, and that's where units should not be considered, in my view. Does that mean you can't make any money in units? No. If you buy a unit at the beginning of a growth curve and sell it at the end of it, of course you're going to make money. But here's the trick. If you bought an investment house in exactly the same place at the same time and held it through to that period, the house will eat the unit for lunch every day of the week in terms of capital growth. In fact, the Real Estate Institute released some data on that, and I have that in Wealth Skills Stage 1 for you, that shows that residential houses average about 9% capital growth per annum, where units on average is around 4%. Just some things that you perhaps don't know that you don't know about property. Here's a live example of that very point. This is a street, live street, in just out of Melbourne CBD, so one of the outer suburbs. Here you can see a house that's quite small on the block. This is just a bit of lean-to on the back here, and so is this. This is the main house here. This is the one I want to look at for this exercise. And if we take a look at it in real size, you can see the building itself is 164 square metres, according to RP data. This one, about 5 doors down in the same street, is 405 square metres, so a much bigger house, nearly 3 times the size. Have a look at the land size, 679, 654. So very small difference between the land sizes. They're almost identical in size. But notice that this one, the house represents 24% of the land area, where this one is 62%. Completely different. This one was purchased in 1979 for $60,000. And let's have a look at what's happened 39 years on. $3 million in value, $3.2 million in value, and the actual value increase in dollar terms is 2.978 value increase there and 3.1 value increase here. So you can see, even though this one cost twice as much to buy to start with, the difference between the two in value now is very small, and that's because of the land component. Here's the percentage growths between the two, and you can see it's because this one's 24% of the land area, whereas this building is 62% of the land area. That means the land represents a much smaller percentage of the value of the asset. So there's a live example for you of how important the land component is. So what is it that you don't know that you don't know? There are 3 main mistakes I see investors making over time. One is they don't know enough about what they're doing. There's a whole bunch of what they don't know, and lacking that knowledge means they make mistakes. 70% never go on and buy a second property because of lack of this. The second thing I see is people trying to save money by not paying independent specialists what they should be. An independent, skilled, experienced tax planning accountant is absolutely critical and worth every cent you pay them. Because with all of those independent specialists, if you are not specialised in that field already, you are likely to shoot yourself in the foot and don't even know you've done it. Pay the people what they're due, the specialists. It's all tax deductible. That way you make the right choices first time, every time, no mistakes. And the majority of investors I see, this is the last one of the 3, the majority of investors fail to plan for the worst case scenario. When you come to Essential Property Group, we will be planning from day one for the worst case scenario, for things to go badly, for things to go pear-shaped from day one. What can go wrong? You lose your job, you lose your tenant, the house burns down, all sorts of different possibilities. But at Essential Property Group, we start with those in mind and say, okay, that's what the risks are. What do we need to do to protect ourselves from them? Let's do that up front. And that's what the Wealth Skills journey is all about. Wealth Skills stages 1, 2, 3, and 4. It's about learning to make informed choices, discovering what it is that you don't know so that you can make informed choices moving forward. If you're looking to get rich quick, I can't help you. If you're looking for someone to do all the work for you, I won't help you. The reason for that is you must be prepared to do some learning, because if you're going to put together a portfolio of investment over time, you need to learn the skills necessary to help maintain it over time. Just a couple of quick stories before I finish. There's been 2 accountants that have commented to me after workshops in the past 16 years. One of them I met about 8 or 9 years back. He had come to a workshop that a mortgage broker had put together and asked me to come and speak at. And there was, I don't know, 35, 38 people in the room in the night. And he came up to me afterwards, the broker, and he introduced to me this accountant guy who'd been sitting in the front row. I didn't know that's who he was or what he was doing, but he introduced him to me. And he said, I just want to hear what the guy's comments were about the workshop. The accountant said, you know, I've been around accounting for over 30 years, and I've attended over 40 property investment spruiking seminars. Yours is the first real workshop I've ever seen, and it's far and away the best I've ever seen. Congratulations. Now, it was nice of him to give me that acknowledgement. He was there to check out whether I was actually legitimate or not. And I appreciated him telling me that too later on. But there you go. That'll give you some idea. That was that account. And there was another one a couple of years earlier who came to me after the workshop and said that he'd discovered out of what I'd taught that he'd been misadvising his clients for 35 years. You see, accountants are skilled and experienced around tax planning and strategy when it comes to business and books. They're not property investment specialists, nor are financial planners come to that. Direct property investing is precluded from a financial planner's sphere of advice by the regulations. Feel free to give me a call. My number will be on the website if you want to have a chat about that as you go. But let me encourage you strongly to go on and do some inquiry about property investment, because there is a path forward if you know what you're doing and you prepare for the worst case scenario from day one. Then you can step forward reasonably confidently and competently. My job is to facilitate that journey with you, and I would love to do that with you.